It's Thursday, the 8th of February. Thanks for joining me. I am really struggling with these markets. This is gold. Now, what I really don't like, as you well know, I just can't do anything with this sideways action. It's random, it's erratic, there's no trend, there's no pattern. This trend line goes back to 13th of December. Okay, it has been touched 3 or 4 times now, so I'm going to rely on that. And then here we have an even shorter term trend line, and the shorter term trend lines are less reliable than the longer term trend lines. So I don't have a lot of faith in this, but there's a resistance at 2065. Now in between there really is just nothing for me to do. This is the 1 hour chart. And look, the moving averages have been flatlining even on a 1 hour chart now for a month. So until we start getting some direction, some trends or some patterns in some of these markets, it really is a struggle to find low risk trading opportunities. It's a similar picture for silver. So far in February, we have certainly not managed to break out of the January range. In fact, going back to gold, as you can see, the first week of February, we're just staying right within the middle of that January range. And the January range in itself is in the middle of a much bigger range for gold. You can see on the daily chart, we're actually trading where we were back in May of 23. We've gone down a bit, gone up a bit, but we're trading, as I say, back in where we were in May 2023. So these markets are just not moving. Sticking with commodities, I'm looking at oil here. And again, going back all the way to December 2022, we're trading at the same levels as we were over a year ago. So oil really hasn't gone anywhere. This is the daily chart. You can see that going back to end of November, really, we've just been hovering around the same sort of areas. We've traded all the way down to $64. We've traded all the way up to $94. We've stayed in the $30 range. And right now at around $75, we're pretty much bang in the middle of that range. And it's really not helping me find low risk trading opportunities. This might be a bear flag in oil. So maybe if we break the lower trend line, we could start to see a significant move to the downside. But even on a daily chart, you can see that the moving averages are flatlining. The good news is in the very short term, and I'm talking really short term, I'm talking like a month and a half, we do have a bull trend for the US dollar. Fundamentally, the US economy is obviously very strong. We had very strong employment numbers last week. Inflation remains more under control than it has been, even though we haven't hit the inflation target. It does seem to be easing, but certainly the economy is strong. Fundamentally, there is an argument for a stronger dollar, and technically from the chart, there is an argument for a stronger dollar as well. So I'm sticking with this short-term bull trend. This is all I have to go on. I have to stick with this, with the short-term bull trend for the US dollar. This is the dollar index, by the way. So what I'm looking at now is that we had a consolidation recently. We had a consolidation recently, a long consolidation from the middle of this January through to the beginning of February. So I'd say that was about 3 weeks of just sideways, random, erratic price action for the US dollar index, which was really untradeable. I don't know whether you managed to trade it, but really, this isn't the kind of pattern that I find easy to trade. Now, since then, we tested the bottom of the range and we rocketed up. We broke through the previous resistance level for the dollar index, which is around 103.80. We are retracing slowly. I'm not sure why. We saw that nice move up on the US non-farm payroll number on Friday, and we've spent most of this week retracing the move. Doesn't really make any sense to me, but I'm hoping that it gives us a buying opportunity for the US dollar. If we come back down to the 103.80 area, it should be a good support level. It's the break point of the consolidation, and we even have the 200-hour moving average moving up towards that 103.80 area for the US dollar index. So I am attempting long positions for the dollar on this pullback. And this is the trade ideas sheet I have for my subscribers for this morning on Thursday. You can see that we've managed to jump into a US dollar Canadian dollar long at 134.70, 134.50. We are trading at 134.50. So we're at the lower end of my entry point for this trade. Stop below 134.30. It's a small risk. It's 20, 30 pips. And if it works, we could be looking at up to 100 pips profit. That definitely works. 3-to-1 risk reward ratio, maybe even 5-to-1 risk reward ratio. The short-term trend you can see here. So there's so much sideways action going on. It really is difficult to find a decent trend. But I'm looking at the US dollar yen, which isn't quite at our point. Actually, we got to within 6 pips. I think it was 6 pips of my buy level yesterday. We just missed it, which is frustrating. But we did manage to get into a euro US dollar short position. So again, I'm buying the dollar there. We're trading at 107.80 right now. So that trade is still around the entry point. Aussie versus the US dollar. Again, we also managed to get into a short position, which of course is a long US dollar position. And that is trading at 65.26. So again, that's bang in the middle of the entry point for my trade. You can see the basis of what I'm doing. You understand why I want to buy the US dollar, and you can see that through these pairs, I'm doing that. I'm not suggesting you should have all three positions on. That might be too much. Or if you do, make sure you spread your risk, because they are all essentially the same position of buying the US dollar. But I had my different levels in there because I don't know which trades will work and won't work. In fact, the GBP trade, the pound went higher than I expected yesterday and broke through that resistance level. So buying the US dollar there didn't actually work. So we got stopped out on that, unfortunately. That's pretty much all I can say. That's my trade sheet for the day. And we'll see if these long dollar positions work. Now, if they do work, and if we do bounce off the support level, there is every reason to believe that the dollar will retest the previous highs, which, as you can see for the dollar index, is around 104.60. So we could have a really decent jump. And you might want to hold on to some of these long dollar positions in the longer term. I'm praying that this is the beginning of a trend. We really need a trend. We haven't had one for such a long time. And if it does work, and then we start breaking above 104.60 for the dollar index, we're going to have a new leg higher. So it might be worth holding on to at least a small long dollar position over the next few days and even weeks, because this might be a swing trade opportunity that I've waited for many months. Okay, good luck if you're trading. Please do leave your comments. And if you've got any ideas on where you think the dollar's going, I'd love to hear about them.